All right, well, let's get a pulse on property now. And despite worrying prices around the country, my next guest says that long-term Australian capital city prices will remain robust, driven by the quality of life, leading to demand that will always outpace supply. Adding a strong property market means a healthy economy. For more, Jarrod McCabe, Director of Wakeling Property Advisory, is joining me live from Melbourne. Now, Jarrod, let me just touch on that again. You think it's expensive to buy in Australian capital city suburban property because really a mix of supply and versus demand, and of course the quality of life being so good.
Absolutely, Jason. Thanks very much for having me. Look, this has come about, one of my colleagues, Richard Wakeling, has just finished reading Richard Glover's The Land Before Avocado book, which is a very entertaining piece looking back at life in Australia in the late 1960s and into the 1970s. And typically when people do look back in time, it's done through rose-coloured glasses. But Richard Glover makes the interesting insights that life back then was actually quite tough. And yes, property prices were very affordable back in the late 60s and early 70s, but that was for a number of reasons. And the quality of life in this country has improved significantly over that period of time, and obviously prices have responded in the property sector accordingly.
Do you think that, I mean, they seem to have risen right through places like Sydney and Melbourne, for example. I mean, from what were exclusive suburbs all the way through to the more sort of working class suburbs in a sense. Do you think that maybe the rising tide lifted all boats, or the quality of life throughout all of our suburban areas and our cap cities is just that good?
I think it's a combination of both there, Jason. I think there's, it's definitely a rising tide lifts all boats, but I think certainly if you look across the markets in both Melbourne and Sydney and other capital cities, it's not consistent across the board, and that's always important when looking at the property market, that you understand that just because median house prices lift across the board doesn't necessarily mean that all sectors of markets within those cities do exactly the same thing. And that's when looking at investment properties versus lifestyle properties, it's important to differentiate and understand what your objective is when buying property.
Given that, I mean, like we said, the lifestyle is great. We can't deny that. It's a fantastic place to live, Australia, and living close to the capital cities is tremendous. It makes life very easy, and there's quality jobs on offer. But when we look at that and we dig a little bit deeper, is there any correlation between the amount of credit that was being put out to what houses are actually worth, in a sense? And do you think the rollback in the moment of the housing prices is due to credit constraints, more so?
I think from a short-term perspective, that's definitely the case at the moment, and certainly the credit constraints are making things quite difficult. If you look at the ability of people to get finance, say 12 months, 2 years ago, it was far easier than what it has been this year, and that's been for a number of factors which are quite apparent within the media at present, particularly around the Royal Commission and that type of thing. So that's making things quite difficult, and that's certainly led to prices starting to contract in the past 6 to 12 months. I think part of it also, though, has been that we've had some fairly significant growth over the past 4 to 5 years, and the market gets to a point where it is seen to be unaffordable for a lot of people, and it does tend to have a slight correction and will more than likely have a plateau going into the second half of 2019.
Well, let's look at that. Let's leave credit now behind and look at a couple of the other factors that you bring up. And now, the emancipation of women and the rise of the double income family wasn't around in the 1970s. So obviously, me and my wife have more money to put into our mortgage. So we're going to be more competitive than maybe 40 years ago when I might have been the only income earner. And then the better access to credit, which we just sort of covered, which at the short term isn't really there. But also a reduction in tariff walls and other protection measures that's really delivered higher incomes and more choice in Australia.
Absolutely, 100% agree, and that's the fact that there is, and this goes to the point of the better lifestyle, not just from a tax perspective, but also from a funding perspective. But typically, the dual income has helped significantly, and the fact that particularly women's rights are far greater now. There's banks are prepared to obviously now look at women's incomes, which is obviously more than fair and reasonable, but that wasn't necessarily the case back in the late 60s and early 70s. So it makes it far more affordable for people to be able to increase their spending capacity and spend more on property, which has, as a result, pushed prices up. And as long as the Australian economy continues to be fairly stable, which is likely to be the case, then maybe not in the short term, but certainly once you start to look longer term, 5 to 10 years down the track, I'm expecting property prices to be stronger than what they have been in recent years.
Well, we always think we're living in the most expensive time, especially if we're raising families, for example. But, I mean, you look at the price of a TV or whatever it is you might have bought that now gets manufactured overseas. It takes up a much smaller proportion for the quality we get of our income. So is it just the case that maybe a lot more of our income is just getting funneled into homes rather than the day-to-day things that we buy?
I think there's certainly an element of that, and I think TVs and electronics are a really good example of that. That the price that you pay for a television or a computer these days, compared to say when I was at university 20 years ago, is probably cheaper now than what it was back then. And the television and the computer is a far greater of a far higher standard than what it was back then. So there's all those sort of things that need to be taken into account. Automobiles, all that sort of thing as well.
Well, it does certainly seem like life is cheaper in some ways, more expensive in others. Just quickly before we go, maybe rounding up in about a minute, where do you see property heading at the moment? I mean, we know that it's slowing down in Sydney and Melbourne. Sydney and Melbourne are not the whole country and they're not the economy, but they definitely represent a large portion of the population. And a lot of us have our wealth locked up in these homes. Where are things going, Jarrod?
And the Sydney and Melbourne are always a good guide too as to where things may go for other parts of the country too. Look, in the short term, I see that there's potential still to be a further contraction for the first half of 2019, perhaps as much as 3 to 5%. But I think what will happen after that the market will start to plateau off, and then we'll see, perhaps not in the short term, but certainly medium term, that markets will start to lift again. But I think I wouldn't be surprised if by the mid part of next year that, given that we're down about 7.5% in Sydney compared to the peak of the market in September 2017, and in Melbourne we're down about 5% compared to the peak, which was November 2017. By sort of mid next year, we could be down as much as 8 to 12% in Sydney and 8 to 10% in Melbourne. But I think that will be a plateauing. And again, that's not necessarily across the board. It's certain sectors will be performing better than others. But that's generally an overview that we're seeing at present.
All right, well, Jarrod McCabe, thanks for getting a bit of a pulse on property in the lead up to this weekend's auctions. Obviously, a lot of people will be thinking about buying a property and they'll take your comments in their stride. That's Jarrod McCabe from Wakelin Property Advisory.